to the deep dive. Today, we're taking a really fascinating look at Apple stock ticker AAPL, but purely through the lens of technical analysis.
Yeah, we're going to unpack what the charts, the trends, those key indicators might be telling us about where Apple stands right now and, where it might be headed.
Exactly. Our mission for you today is to get beyond just the surface noise. We'll look at the big picture, the monthly time frame, then zoom into the weekly.
And then down to the daily movements as well, sort of peel back the layer.
Right, like getting different altitudes on the same landscape. You might be surprised what patterns pop out when you really dig into the data like this.
Definitely.
Okay, let's unpack this. We're starting wide with that monthly time frame. It gives us that crucial long-term perspective. What's the main story here for Apple on this scale?
Well, what's truly insightful, I think, is how Apple's price action on the monthly chart has consistently shown this really strong bullish trend.
Okay, bullish trend. So higher highs, higher lows.
Exactly. It's been reliably forming those higher highs and higher lows. Think of it like building blocks, each one higher than the last, signaling, sustained confidence.
Right.
And since January 2023, the stock's been moving pretty neatly within what we call an ascending channel.
An ascending channel, like a corridor heading upwards.
Precisely. Imagine two parallel upward sloping lines. The price has been climbing steadily right inside that corridor. It respects the boundaries, which speaks to a kind of controlled, powerful ascent.
Okay, that sounds pretty positive overall.
It is, but
yeah,
if we look a bit closer, there's an interesting detail, something that adds a layer of, caution. It's the monthly relative strength index, the RSI.
Ah, the RSI, momentum indicator, right. Tells you if something's overbought or oversold.
Exactly. And in Apple's case, the monthly RSI is showing what's called bearish divergence.
Bearish divergence. So the price is going up, but the indicator isn't keeping pace.
That's it. The stock price itself is making higher highs, but the RSI, the momentum, is actually making lower highs. It's kind of like a car still speeding up, but you notice the engine sounds like it's straining, the RPM's dropping a bit.
Okay, I see. So the buying pressure might be weakening underneath, even with the price rising.
Potentially, yes. It suggests that while things look strong on the surface, the underlying momentum might be losing steam. It could hint at a slowdown, maybe even a correction down the line. It's subtle on a monthly chart, but definitely something to keep an eye on. Don't get complacent.
That's a critical piece of information. Okay, strong trend, but with that RSI caveat. Now let's talk about a specific point in time the charts highlight. April 2025. What happened then, and why was that moment significant?
Right, so in April 2025, the stock price actually came back down to retest a previous higher low from back in April 2024. That was specifically around the $170 mark.
$170, and that acted as support.
A very strong demand zone, yes. Think of it like a price floor where lots of buyers tend to jump in. And the monthly candle for April showed a really strong rejection from that zone.
Yeah, just a small bounce then.
No, buyers stepped in decisively. They pushed the price back up with conviction, stopped it falling further. It really confirmed $170 as a key support level.
Okay, so that support held strong. Where is it now relative to key averages?
Well, building on that strength, Apple is currently trading around $239. And importantly, that's significantly above its monthly 21-period exponential moving average, the 21 EMA.
The 21 EMA, often seen as a dynamic support line, right?
Exactly. It moves with the price, but generally acts as a baseline for healthy upward momentum. Trading consistently above it, like Apple's doing, is usually seen as a very strong bullish sign. It reinforces that demand is high.
Got it. Strong support confirmed at $170, now trading well above the 21 EMA. Okay, so that's the big picture. Now, here's where it gets really interesting, I think. Let's zoom in. Moving from that monthly view to the weekly time frame, are we just seeing more of the same bullishness, or do new details emerge?
Well, on the weekly time frame, we absolutely see the stock also trading above its 21 EMA.
Okay, so consistency there.
Yes, that consistency across time frames really reinforces the sustained buying pressure, the health of this medium-term uptrend. And based on that positioning, there's a high probability, I'd say, that Apple could test the $250 level in the coming weeks.
$250, that's often a psychological level too, isn't it? Round number.
It is. It often acts as both psychological and technical resistance. So that's a key level to watch.
And if the momentum keeps up, what about the all-time high? That's around $260. Right?
Exactly, around $260. If this momentum continues, it's quite possible we could see this not just test, but actually break and close above that previous all-time high.
And a close above an all-time high, that's always a big deal.
Huge deal. Monumentally bullish, really. It means the stock's in uncharted territory. No overhead resistance from past sellers. It often opens the door for significant further gains. Price discovery mode, basically.
Breaking an all-time high definitely captures attention. So if Apple pushes past $260, breaks that ceiling, what's next? Where might the next resistance levels pop up on the radar?
Good question. When you're in uncharted territory like that, we often turn to tools like Fibonacci extensions.
Fibonacci, right. Those mathematical ratios applied to charts.
Yeah, they help project potential price targets based on previous price swings, kind of like plotting points on a map where there are no roads yet. In Apple's case, on the weekly chart, the 1.13 Fibonacci extension level lines up very nicely near $275.
$275, okay.
So in the absence of historical price action up there, that $275 level based on the Fibonacci extension becomes a really key potential target or resistance point to watch if $260 is broken.
Interesting. Okay, so we have the long-term bullish picture with that RSI washout and a strong medium-term push potentially towards $250, $260, and maybe even $275.
Correct.
So what does this all mean for the day-to-day, for the shorter-term view? How does the daily chart fit into this bigger picture we're painting?
Right. The daily is where you see the immediate reaction to these bigger levels. So let's say the stock hits that previous all-time high around $260, but doesn't immediately blast through. It respects it as resistance.
Okay.
In that case, we might see a short-term pullback on the daily chart. Not necessarily a major reversal, but maybe a dip, a chance for the market to kind of catch its breath, consolidate.
Where might it pull back to?
It could pull back to retest the daily trend line. That's like the immediate upward sloping support line for the short-term move. So it might dip back to that trend line before, gathering strength to try and break $260 again.
Like coiling a spring before the jump.
Exactly. It's fascinating to see how the daily chart shows those tactical reactions to the big strategic levels from the weekly and monthly charts. They all interact.
Okay, and if or when that breakout happens, a clean break above $260, what are the next targets on the daily? Where does it likely head next?
Well, once that breakout happens decisively, the next target we'd look for is, again, that same Fibonacci extension level we saw on the weekly chart. It points towards $275.
Okay, so the Fibonacci target holds across time frames.
It does. But what's really interesting here is, remember that ascending channel we saw way back on the monthly chart?
Yeah, the upward sloping corridor.
The upper trend line, the ceiling of that long-term channel, also projects upwards to be near that same $275 level around the time a breakout might occur.
Wow, okay. So the Fibonacci extension and the top of the monthly channel are both pointing to $275.
Precisely. You have a confluence of resistance points there. Two significant independent technical indicators lining up at the same price level.
That raises a big question then, doesn't it? If Apple gets to $275, that level could be incredibly strong resistance.
It suggests it could be a very significant hurdle, yes. A place where you might expect substantial selling pressure, or at least a significant pause or consolidation.
This has been incredibly thorough, looking at Apple from monthly down to daily. It really shows how much information is packed into these charts. So let's try and bring it all together for our listener. What are the absolute crucial takeaways from this deep dive?
Okay, connecting all the dots, I think the main message, looking across all the time frames, is still predominantly bullish. We've seen strong support confirmed, especially that big rejection at $170.
Cutting it to that was key.
And the fact it's trading consistently above the 21 EMA on both the monthly and weekly charts, that's significant underlying strength. Plus, we have clear resistance targets now in sight, especially if we break that all-time high. But yes, that monthly RSI bearish divergence is still there. It's that important reminder, that even in strong trends, you need to watch for subtle shifts in momentum. Always use multiple indicators. Don't just rely on price.
Good advice.
And maybe the most fascinating takeaway for me is that confluence around $275. The Fibonacci extension and the top of that long-term channel both pointing there. That makes $275 a really critical level to watch if the rally continues.
What an insightful look at Apple's technicals. It's really clear that understanding these patterns, these indicators, gives you such a powerful lens for looking at potential market moves. It helps you anticipate.
Absolutely. And it raises an important question for you, the listener. How do you take these technical insights, the charts, the indicators we discussed, and weave them together with other types of analysis, maybe fundamentals, maybe market sentiment, maybe broader economic news? How do you build your complete picture of a stock like Apple? Because the market is always dynamic, right? These trends need constant watching.
always evolving. Well, thank you for joining us on this deep dive today. We really hope you found these technical insights valuable for your own thinking.
Hope so too.
And if you are looking for more in-depth analyses like this one, please do consider subscribing to our YouTube channel, Investor's Edge. And maybe give this video a like if you found it helpful. We definitely appreciate your support.